All right, let's dive in. Today, we're taking a look at the hidden architecture of global finance. And it's a blueprint that was designed centuries ago, not with stone, but with debt. And it's a design that, believe it or not, still shapes the power of nations today. So let's see just how it was built.
This idea right here is the foundation of our entire story. The architects we're about to meet didn't just see money as cash, they saw it as leverage. They understood that controlling the flow of capital was way more powerful than just owning a big pile of gold. They were building a system, you see, and that system would go on to reshape the world.
And that really brings us to the central question, doesn't it? It seems kind of impossible. I mean, how could a private family or a single firm become more influential than a king with a whole army? Well, the answer wasn't in swords or cannons. It was in a totally revolutionary new way of thinking about wealth, risk, and especially information.
To really get this new system, we first have to understand the biggest flaw in the old one. For centuries, running a kingdom, and especially trying to fund a war, was just a logistical and financial nightmare. The reason was actually pretty simple. A king's wealth was physical, and it was slow.
So you can see the fundamental clash right here. The king's wealth was all stuff you could touch, land, gold, taxes, but it was also really slow and hard to get your hands on quickly. The banker's wealth, on the other hand, was intangible and fast. It was all about information, credit, and a network of contacts. So, when a king needed a massive amount of cash right now to fund a war, his physical coffers were often pretty useless. This created a huge power vacuum and a massive opportunity.
And this is where our architects step onto the stage. The Rothschild family, led by Mayor Amschel in Frankfurt, didn't just fill this gap. They designed a whole new system to completely master it. Their blueprint was nothing less than an international financial empire, built on family, speed, and trust.
And this strategy, honestly, it was pure genius. Mayor Amschel sent his 5 sons to the 5 key financial hubs of Europe: London, Paris, Vienna, Naples, and of course, he stayed in Frankfurt. Now, this wasn't just a business expansion. What he was doing was creating the first truly private international intelligence and financial network. They can move money and, crucially, information across borders faster and more efficiently than any government on Earth.
So, the big question is, how did they pull it off? Well, their success wasn't magic. It was built on 3 core strategies that were totally revolutionary for their time. First, they prioritized information above everything else. Second, they changed their whole customer base, going from merchants to entire governments. And third, they brilliantly figured out how to manage their risk. So let's break that down.
And here's how it all worked in practice. They had their own private courier network that brought them news of battles and treaties days, sometimes weeks before governments knew. This gave them an insane market advantage. Then, by lending directly to states, they basically secured entire nations as their clients. And because their network was spread out all across Europe, a crisis in one country wouldn't sink the whole enterprise. This was the blueprint for modern multinational banking.
Now, the consequences of this new model were absolutely world-changing, especially when it came to war. The Napoleonic Wars became the ultimate testing ground. You see, the real battle wasn't just being fought on the fields of Waterloo. It was being waged on the balance sheets in London and Paris.
And this right here is the crucial point. Think about it. Before, a king could only fight for as long as his gold reserves held out. But now, a nation could fight for as long as it could secure loans. The ultimate limit on a state's military power was no longer its treasury, but its creditworthiness in the eyes of private bankers. The power had fundamentally, completely shifted.
This shift gave birth to the system we all live under today: permanent national debt. Instead of having to raise these crippling taxes all at once to pay for a war, governments started issuing bonds. They'd borrow huge sums of money from these international bankers and just promise to pay it back, with interest, over decades. So the war could be won now, and the bill, well, that would be paid by future generations.
But, this easy solution came with a huge hidden cost, a cost that was paid in sovereignty. When a nation is constantly in debt, it's just not entirely its own master anymore. The lender, whether it's a bank or another institution, starts to gain real influence over the borrower's decisions.
These conditions might sound a little familiar, and that's because they're still used today by big institutions like the IMF and the World Bank. When a country is deeply in debt, its creditors can demand policy changes. And these aren't just suggestions, they're often strict requirements for getting the next loan. The nation's budget then has to serve its debt first, and only then can it serve its people.
And this really gets to the heart of what we mean by financial dependence. A country can have all the symbols of being independent: a flag, a government, elections.
But if it doesn't actually control its own budget, how free is it really? Its domestic policy choices on everything from healthcare to education become squeezed and constrained by the demands of its international creditors.
So look, this isn't just some ancient history lesson. The blueprint designed by these early financial architects didn't just vanish. It actually became the standard operating procedure for the entire global financial system we have today. The methods were so successful that they were copied and institutionalized everywhere. The parallels to today are just striking. The Rothschilds' practice of lending to governments, well, that evolved into the massive global market for government bonds. Their international family network became the forerunner to today's huge global financial institutions. And their information advantage, that's now the role of powerful credit rating agencies that can literally make or break a country's economy with a single report. The names have changed, but the architecture is the same.
And this quote just summarizes the entire transformation perfectly. Power in the 21st century is way less about military conquest and much more about financial control. The most effective way to influence a country isn't to invade it, it's to control its debt.
So we end here. This whole explainer isn't about blaming a single family or some secret group. It's about understanding the system itself, a system of finance designed centuries ago that continues to shape the power, the freedom, and the choices of nations to this very day. And it leaves us all with a pretty critical question to think about. If our world runs on debt, who exactly is running the debt?